Hello everyone, I am going to discuss the topic of national accounts today. National accounts is a topic in your economic portion of civil services examination syllabus. Alright, and this is the first few things that you need to know before you start reading any other chapter of your economy syllabus, because the things that you derive from national accounts discussion will be used in understanding any other chapter of your economy. Alright, so the purpose of discussing national accounts basically is to derive the formula for what we know as gross domestic product. This is the most important macroeconomic parameter of any economy, gross domestic product. Once you understand GDP, how it is derived, what its role is in the economy, you will be able to better understand all other topics of your economy portion. All right. So the topics national accounts and the purpose to derive the formula for gross domestic product. All right. So in economy, the economic decisions, interventions, the quality of economic decisions and intervention depends on the quality of data. For any economy, data it is extremely essential for the governments to take any important economic decision. And from where the data comes? The data comes if the government is able to track the flow of money. Money is like blood in our body. The way blood flows in our body, similarly the money flows in the economy. And if the government is able to track the flow of money, it can generate a very good data, and on the basis of which the government can take important decisions. So which kind of money the government needs to track? The most important among the flow of money in the economy are particularly the sales of firms, consumer spending, basically spending by households or individuals, government purchase of goods and services. I will explain it in a while, what we know as government purchase. Then you have investment spending. Investment spending is basically the spending by firms on the creation of capital goods. Capital goods like buildings, structures, machines, equipments, tools. These are all called as capital goods, and they assist in the production process. They themselves do not get transformed in the production process. This is the basic difference. Okay? Also, the data on export and import. Okay? If the government has been able to track all this flow of money, the government can understand what is GDP of the economy, and from GDP you can derive various other macroeconomic aggregates like a gross national product, a national income, personal income. These are the things that you will know in the national accounts discussion. Okay? Over and above GDP, from this data only you can understand what is called as inflation or balance of payment, over and above exchange rate, further savings rate, even investment rate also. So tracking the flow of money, particularly these parameters, can help us understand the main macroeconomic parameters of any economy. Okay? So the purpose of national accounts is to track the flow of money. The national accounts tracks the flow of money. Like the main flow of money is this one, like sales of firms, consumer spending, government purchase of goods and services, export, import, investment spending. And on the basis of this flow, we can able to understand what we have is GDP, inflation rate, balance of payment, exchange rate, savings rate, investment rate. Okay? So a lot of things can be understood by tracking this flow of money. Okay? But for today's discussion, the purpose is to derive the formula for GDP. Okay? So it's like medical sector. When you have problem in your body, you go to the doctor. Doctor will first prescribe you certain tests, and on the basis of those results, the doctor will be able to pinpoint the exact problem your body is facing. So is the case with economy. If the economy has a problem, the government needs data, the authorities needs data to take accurate or correct decision. ठीक है. So once we have good quality data, so good quality data will lead to good quality outcome of economic decisions. ठीक है. So for any economic intervention to be successful, government needs to have good quality data. ठीक है. So in national accounts, what we know is circular flow diagram. ठीक है. Circular flow diagram basically tracks the flow of money. That I will explain that diagram in a bit. So see the second, next is circular flow diagram. So circular flow diagram basically tracks the flow of money between 4 sectors of the economy. And since the money is flowing, the money must flow in exchange of something, that is in exchange of goods and services. Therefore, it also tracks the performance of 3 markets. Means the money is flowing between 4 sectors via 3 markets. The 4 sectors are firms, households, government sector, and rest of the world. The money broadly flows between these 4 sectors of the economy via 3 markets. Markets for goods and services, markets for factors markets basically, and the third is financial market. Financial market comprises of the banks, mutual funds, insurance. ठीक है. So these are the 3 markets and these are the 4 sectors. The fund, in national accounts, the national account that tracks the flow of money, it basically tracks the flow of money between 4 sectors of the economy through these 3 markets. ठीक है. So I have basically drawn the chart of this flow diagram of circular flow diagram. This is how the circular flow diagram actually looks. Here we have 4 sectors: government, household, firms, rest of the world, and 3 markets. Markets for goods and services, factors market, and then we have third is financial market. And this is basically the flow of money. But before we understand this circular flow diagram, we need to know what is called as factors of production. Factors of production. Since we have to calculate the formula for GDP, we need to know about the basic things that firms need to produce goods and services. All right. So what are factors of production? See, for any firm to produce anything, it needs certain basic things to start its operation. The first thing is land. It needs land to set up its enterprise. Then it needs labor, people who are willing to work in that enterprise, and then it needs capital, means money that's needed to finance the production process. Then you need entrepreneur. Who will decide how much of land, labor, capital to use, what to produce, how much to produce, where to sell it, what will be the selling price of the product. So that is the basically responsibility of entrepreneur. And see, in economy, all these 4 factors of production are supplied by households. In economy, in national accounts, we do not use the term individuals, although the person who will be giving or renting the land will be an individual, or person who is working in the factory is a individual. But we use the term households. Households are supplying land, households are providing laborers to work, households are providing capital, and households are providing entrepreneurs. ठीक है? So these are the 4 basic things that industries or enterprises need to start their production process. And in return, after taking the services of these 4 factors of production, the firms basically give basically give rent in return for the use of land, and for the use of labor they will give wages. Okay? Then in return for capital, the money used, they have to give interest on the money used, and for entrepreneurs they have to give profit. So basically the entrepreneur, after paying for the rent, wage, interest, keeps the profit with himself. Okay? So factors of production is important for you to understand before you understand the topic of national accounts or circular flow diagram, that these are the 4 factors: land, labor, capital, entrepreneur, which are essential for the production process to start. Since we are discussing GDP is a gross domestic product. Okay? GDP generates from the production process. Therefore, to understand the production process in detail, we need to know what are the factors of production, what are the things involved in the production process. Okay? So these are the 4 things involved in the production process, and since households are providing these things, in return households are getting rent, wage, interest and profit. These are called as factor payments. Factor payments households receive in return for giving factors of production. Factor payment. Okay? And now we will see circular flow diagram in which we will understand the flow of money in 4 sectors, among the 4 sectors through 3 markets, that is goods and services market, factors market and financial market. Let's see here. Government, households, firms, rest of the world, 4 sectors. Goods and services, factors market, financial market, 3 markets. Okay? Now see, we will see again each of the sectors in detail. First, we will take the firms. How the money is flowing among firms. See, one rule of this circular flow diagram is that for each of the boxes, government, households, firms, rest of the world, the money flowing in the particular box or in a particular sector will be equal to the money flowing out of that particular box or particular sector. Okay? This is the principle of flow of money, that money flowing in a particular sector must be equal to the money flowing out of that sector. Okay? So first we have taken the firms. Here is the firm. So the money in firms is basically the firms are paying to the households in factors market. Acha, you must have seen, I'm explaining factors market, that in urban areas there are certain squares or T points where in the morning there are laborers and the contractors will come negotiate the wages, and they will take the laborers for a few days or few months of work. Okay? That is a perfect example of factors market, where people, entrepreneurs or contractors who need laborers, they are basically negotiating wages there and taking the laborers for work. Okay? So in a factors market, firms are basically paying factor payments to the households. It means that money is going out of the firms. Okay? So what basically firms are getting? Firms are getting expenditure from all the other sectors, or take it as revenue. Although revenue term is not used here, I will explain later. Okay? In a while. So basically what firms are getting? The firms are getting is sales revenue. Since they are supplying goods and services to the market, by the sale of those goods and services, they are getting sales revenue. Okay? And what is the money going out of firms? The money going out of firms is basically the factor payment. Factor payment is going out of the firms because they have to pay the households for providing the factors of production. Okay? Then another thing going out of the firms is investment spending. As I explained in the beginning, firms, although they produce goods and services, but firms also need goods and services. Okay? Like they have to build structures, buildings, they have to purchase machines, big machines. Okay? So they also purchase certain capital goods from the market for goods and services. And the investment on the purchase of capital goods is called as investment spending. It means that from the firms sector, the money going out is investment spending. ठीक है. Then we will see households. ठीक है. Now see here, money coming in the household sector is basically the factor payment, rent, wage, interest and profit. We will denote it as plus. Plus is basically rent, wage, interest and profit. These are the factor payments that households are receiving. Therefore I have used the sign plus. ठीक है. All right. Then what they are also receiving? They are receiving transfer. This is called as transfer payment. What are transfer payments? See, households also receive transfer payment from the government. Transfer payments are basically the scholarships, the old age pension, or any other kind of monetary benefit that the government is providing to its citizens. These are called as transfer payments. Mind you, transfer payments are not in exchange of any goods or service. Therefore, transfer payments are not included in the calculation of GDP. That I will explain you in a while when I will explain the definition of GDP. ठीक है? So, households also receive transfer payment, various monetary benefits or monetary assistance. ठीक है? Monetary assistance from government. Transfer payments. Then what households are giving? I will use the term sign, means going out of the household sector. First is tax. Households have to pay tax to the government, and tax is basically the main source of income for the government, from which the government incurs different kind of expenditure. ठीक है? So the money going out of the households is tax money. Then they have received the factor payment, they have received the transfer payment, and a part of their income, that is factor income or factor payment, is paid in the form of tax to the government. ठीक है? The money remaining after paying for the tax is used for consumer spending. So households, individuals like we purchase a lot of things from the market. ठीक है? Market for goods and services, which we call it as consumer spending. ठीक है? So the money left after paying for the tax and purchasing the essential things that we use, ठीक है? The rest of the money is basically saved in the banks in the form of private savings. I told you financial markets consist of banks largely. 2/3 of the financial market is basically banking services. ठीक है? Then you have mutual funds, insurance funds, pension funds, and different kind of other type of financial services. So households save their money in financial market. So money going out is also private savings. Once you understand the circular flow diagram, it is basically entire economy in a nutshell. ठीक है? Then we will understand government sector. So what are the income for the government? That's plus sign. The first income for the government is tax. Tax is the main source of income for the government. So budget में आपने देखा होगा कि if the tax are insufficient to finance the expenditures proposed, the government has to borrow money from the market. Means basically there is budget deficit, there is difference between, or rather the income of the government is less than the expenditure. It means there is deficit, and that deficit is financed by borrowing from the market. ठीक है? So government basically borrows from the financial market. ठीक है? So money flowing in government sector is also borrowing. All right? And what is the money flowing out of government sector? First is transfer payments. Transfer payments to the households. Then the government uses the tax money and the borrowing to purchase goods and services. Let me explain how government purchases goods and services. See, government is also involved in construction of or development of a lot of things. Like government constructs highways, roads, railways, airports, and various different kind of infrastructure. And to construct those infrastructure, government needs certain goods like concrete, raw material, iron, steel. Okay? These are basically goods. Or even to run government offices, the government has to purchase furniture, stationery items, and different kind of things. So these are called as goods. And government has to go in the market for goods and services to purchase all these things. Okay? So this is called as government purchase of goods. Now government purchase of services. What are services for the government? Basically, government has to pay salary and pension to its employee. So employees are basically giving their services to the government, and government is paying salary to them in return for the services that they have given. If you become civil servant, you will basically give your services to the government, and the government will in return pay to you in the form of salary. That is called as government purchase of services. Okay? So just like any other private firm purchases goods and services from the market, hire people from the market to execute its projects, similarly government also purchases goods and services from the market. And to purchase those goods and services, government has to pay money, government has to incur expenditure. Therefore, government purchase is the expenditure is required to purchase goods and services. Government purchase of goods and services is basically the money flowing out of the government sector. Okay? Then is the rest of the world. How the rest of the world participates in our domestic economy? See, first take the exports. I told you we are discussing about flow of money. When Indian firms are exporting outside, export leads to a flow of money into India, because the countries who are importing Indian goods and services, they will basically pay for the goods and services, and the money will come into India. Similarly, if any firm is borrowing from outside, in countries like Japan, you have the interest rate there is very low. Therefore, it's profitable for many firms to go and borrow outside India compared to India, because the cost of borrowing in India is quite high compared to countries like Europe or Japan. Okay? So whenever the firms are borrowing outside, it will lead to flow of money into Indian financial market or into India. Okay? Similarly, if any Indian bank or firm is lending money to any outside firm, it will lead to flow of money outside India. Okay? It will lead to flow of money outside India. So I will denote it as negative sign. Similarly, imports lead to flow of money outside India. When you are using any imported item, let's say iPhone, when the iPhone is imported, so when you are paying the money will go outside India to the firms or to the countries that have produced that particular iPhone. So in case of imports, for all the imported items, the money exchanged will go outside India. Okay? So for us, the important things that we'll use here is, first is investment spending, that we will use in the calculation of GDP, investment spending. Then we have rent, wage, interest and profit, that is factor income for the households, and for the firms it is factor payment for one and income for other. Then we will use the term consumer spending. Okay? Then we will use government purchase of goods and services, and we will use the net of export, that is export minus import. ठीक है? ये क्यों ऐसा होगा? I will explain in a while. All right. So these are the four sectors: firms, households, government sector, rest of the world. I have explained how the money flows in a particular sector and how the money goes out of a particular sector. ठीक है? So this is the basically circular flow diagram, and it is brief explanation. Now we will see GDP. Gross domestic product. So what is the definition of gross domestic product? GDP is basically the total value of final goods and services produced in an economy within a year. ठीक है? So it is the total value of final goods and services produced in an economy in a year. See, total value of final goods and services, final goods. So to understand the concept of GDP, there are certain conditions. The first is that the good has to be final good. It means, बात क्या यहाँ पे हो रही है? Total value, value of final good. It means we will discount the value of intermediate goods or raw material from the value of final goods. ठीक है? So here the discussion is about final goods. So lot of intermediate goods and raw materials are used in the production of any good. ठीक है? So calculating the value of intermediate goods or raw materials along with the final goods will lead to an error of what we call as error of double counting. ठीक है? क्योंकि फाइनल गुड्स तो हम कैलकुलेट कर रहे हैं, उसका वैल्यू कैलकुलेट कर रहे हैं, एंड व्हेन वी विल सेपरेटली कैलकुलेट द इंटरमीडिएट गुड्स देयर विल बी एन एरर बिकॉज द वैल्यू ऑफ इंटरमीडिएट गुड्स विल बी काउंटेड ट्वाइस, फर्स्ट सेपरेटली इंडिविजुअली एंड देन एज पार्ट ऑफ फाइनल गुड्स. ठीक है? सो व्हेन वी आर टॉकिंग अबाउट फाइनल गुड्स इट मींस दैट वी विल डिस्काउंट द वैल्यू ऑफ इंटरमीडिएट गुड्स. सी टेक द एग्जांपल हियर, टी लीव्स. व्हाट आर फाइनल गुड्स? Final goods vary depending on the nature of its use. ठीक है? See, tea leaves, if it is purchased by you, a household owner, then it will be used. You will prepare the tea, you will consume the tea at your home. ठीक है? It means the tea leaves are basically final goods for you. But when the same tea leaves are purchased by a shopkeeper who is selling tea, then the tea leaves for him is basically intermediate good, not final good. ठीक है? So a good can be intermediate, it can be final depending on the economic nature of its use. Who is using it? What is the purpose of its use? Whether the purpose is of immediate consumption by themselves or the purpose is to sell it to other consumers. ठीक है? So depending on its nature of use, the definition of final good will vary. ठीक है? Then the definition is basically the final goods and services produced in an economy. In an economy. Remember here, the concept of GDP is basically a territorial concept. Means domestic territory. Whatever is produced in the political boundary of India will be included in the definition of GDP. Whatever is produced outside India will not be included in the definition of GDP. ठीक है? मैंने आपको बताया in the rest of the world sector that we will take the net of export minus import. Export minus import. The sign that we use here is X minus IM. Why? Because exports, whatever India is exporting, it is generating revenue to Indian firms. And whatever we are importing, it is generating revenue for foreign firms. But the concept of GDP is territorial, that produced within the political boundary of India. Therefore, we discount the money going outside India from the exports. ठीक है? Exports minus imports. That is the net amount going to the firms. It can be positive, it can be negative. All right. So moreover, you have to remember that certain things like embassies. This is important for prelims. Embassies. Embassy of any country in any other country is its sovereign territory. For example, Embassy of India in Pakistan, that is called as High Commission, is sovereign territory of India. So whatever services the embassies in Pakistan, Indian embassies in Pakistan are providing, will be included in India's GDP. ठीक है? So the concept of domestic territory is not similar to that of political territory. All right. So whatever is produced in the domestic territory of India will be included in GDP. All right. So there's one more term, gross national product, where we also include the factor services provided by Indians outside India. That is different thing. I will discuss that after discussing GDP. All right. One more thing, normal resident. To understand GDP, these are the few things that you need to know to have better clarification. So GDP says that no matter who is producing in India, when that person is working in the economic interest of India, his or her output will be included in India's GDP. For example, the definition of normal resident is different from citizens. Okay? It is possible that you are a citizen of India, but you are working for Singapore or Dubai government. Okay? And it's also possible that you are a citizen from any other country. Let's say people of Nepal, they work in India. A lot of people from Nepal work in India. It means their economic interest lies in India and they are contributing to India's GDP. Therefore, they are normal resident of India. Whosoever is producing, working in India are basically normal residents of India. So the definition of normal resident is not same as citizen. Okay? A citizen of India may be working for India or he or she may be working for any other government. Okay? So normal residents means people whose economic interest lies within India. So when you are trying to understand GDP, you have to know certain things, that GDP is first a territorial concept. Whatever is produced in India will be included in India's GDP, no matter who is producing. Maybe a South Korean firm is producing in India, but its contribution, its production will be included in India's GDP, not in South Korea's GDP. Okay? Similarly, final goods, in GDP, we will aggregate or we will add the value of final goods only, not the intermediate goods or any other raw material. Okay? Third is the concept of normal resident. All right. So in total, there are 3 ways in which the GDP can be calculated. There are total of 3 ways. So calculating GDP. The first is product or value added method. You know, in India, the GDP data or national accounts data is produced by Central Statistical Organization. Central Statistical Organization, this organization is under the Ministry of Program and Ministry of Statistics and Program Implementation, Government of India. Okay? So there are 3 different ways of calculating GDP, and no matter which method you take, you will get the exact result. The same data you will get. Okay? So the first method is production or value added method. In this method, basically, government has offices across the country and the government conducts survey. Okay? To identify to know the value addition by firms in different sectors. Okay? So in product or value added method, what we do is that we basically sum up the gross value addition of all firms in the economy. When we add all the firms, the GVA of all the firms, we will get GDP. So how you calculate GVA? Gross value addition. Gross value addition, see the meaning of value addition. Okay? Whenever a firm is producing anything, it has to take help of raw material or an intermediate good. And when it has produced the final good, or it has processed that intermediate good, so the value of intermediate good and the value of final good. Okay? So the value of final good will always be higher than the value of intermediate good, which is called as value addition. Okay? Gross value addition. So to know the value addition by the firm, we have to calculate the value of final good. Okay? Value of final good minus value of intermediate good, then we will able to exactly know what is the contribution of a particular firm, because intermediate good may not be produced by that particular firm, it is produced by some other firm. So the gross value addition, the value addition by a particular firm will be equal to the value of, this is basically market value we are talking, okay? Market price or market value. So the value of final good, let's say in production of this pen, let's say the final value of this pen is 20 rupees, and the value of intermediate goods used by the firm producing this pen is rupees 10. Therefore, the gross value addition is 20 minus 10 equal to 10 rupees. Okay? So, this is the gross value addition. And what is GDP? GDP is basically the sum of gross value addition of all the firms in the economy. So, government has to conduct survey, aggregate data on value addition, and when it adds value of all the firms, value addition of all the firms, it will arrive at GDP. No matter how small, how big a firm is, no matter what it is producing. It may be producing a needle, a car, an aeroplane. It may be a micro industry. It may be a very large big firm. The value addition of all the firms will be added to arrive at GDP. Let me explain you. We will take an example to understand how the value addition takes place. Okay? Suppose that we are talking about a small economy, very small economy, and it has only few economic agents, means few producers. Suppose that if this particular agricultural company which is producing agricultural inputs to be used by farmers. Okay? Since I have used two terms, final goods and intermediate goods, whatever firm is producing, it has to take help of intermediate goods. But here, for the sake of explanation, we will assume that this particular company has not taken any intermediate good. Okay? It has produced on its own goods worth rupees 50. Okay? Then it has sold all the goods, rupees 50 good, or agriculture input to farmer who produces wheat. The farmer takes help of agricultural inputs provided by the company. He has purchased agricultural inputs worth rupees 50 and he has produced wheat worth rupees 100. Okay? Then the farmer kept a part of the wheat to himself for his own consumption and sold a part to the baker. Means he has kept rupees 50 wheat for his own consumption and sold rupees 50 wheat to the baker. So the baker who produces bread has used this input of wheat to produce breads worth rupees 250. Breads worth rupees 250. Now the baker has sold this bread to a particular restaurant. Okay? So the restaurant owner has purchased wheat worth rupees 100 and he has produced food from that bread worth rupees 300. Now you can see here that one particular chain of value addition, the agriculture company producing agriculture inputs, selling it to farmer producing wheat, selling it to baker producing bread, and baker selling bread to the restaurant owner. He is producing particular food items. Okay? So in all these stages, there is some value addition. You can see here, from 50 rupees input, the farmer produced wheat worth rupees 100, and from 50 rupees of wheat, the baker produced bread worth rupees 250, and from 100 rupees of bread, the restaurant owner has produced food worth rupees 300. Now see, this is the final good for the restaurant owner. Okay? And for him, the input is bread. Okay? Here, this is intermediate good. Then for the baker, the wheat is intermediate good. Now we will see the value addition by each of these economic agents. Alright. We assume that agricultural company has not taken any input. This is assumption, although practically it is not possible. So value addition is basically of rupees 50 by the agricultural company. Then the farmer has taken input of rupees 50 and the final output is of worth rupees 100 for the farmer only. Okay? So as I said, we will discount the from the value of final good, that is rupees 100, we will discount the value of intermediate goods, that is rupees 50. So the value addition by the farmer is of rupees 50. Then input taken by baker worth rupees 50, final output worth rupees 250. 250 minus 50, 200. All right. Similarly, restaurant owner, final good is worth 300, input is worth 100 rupees. The net value, the value addition by the restaurant owner is 200. So rupees 50, 500 will be the GDP of this small economy that we have assumed. Means basically we are adding the value addition by gross value addition by all the economic agents, that is producers in this small economy. And when we add the value addition by all the firms, we will get GDP. So for this small economy, the GDP is worth rupees 100. GDP. Okay? I'll explain you again by expenditure method, next method, how the data is again same. All right. So expenditure method, second method. Now see, this is the circular flow diagram. I said you that here we will use the term GDP. Okay? Expenditure method. In expenditure method, we basically aggregate or add the expenditure incurred by all the sectors of the economy. Means government, household, firm, rest of the world. Okay? And see, whatever is being sold in the market will be purchased by one or the other sector of the economy. Okay? And when they are purchasing, they are incurring expenditure from their side. And that expenditure is basically revenue for the firms. That's why I use the term revenue, although this term is not used in the discussion on GDP. Just for the sake of explanation, I use this term. So all the government is spending money through government purchase. Households are spending money through consumer spending, firms are incurring expenditure through investment spending, and export minus import. Okay? So all this expenditure is basically flowing to the firms who are selling goods and services. All the sectors are purchasing goods and services, they have to incur expenditure, and that expenditure basically flows to the firms in the form of sales revenue. Okay? So in expenditure method, we add all the expenditure incurred. So through expenditure method, how we calculate GDP is basically GDP will be equal to government purchase. For government purchase, we use the term G. Okay? For consumer spending, we use the term C. C we denote by C. Then for investment spending by firms, we use I, and then export minus import. It can be negative, it can be positive, depending on the economy. Okay? So GDP is basically the aggregate of expenditure by all the sectors of the economy. Now we will see how the expenditure for this small economy, through expenditure method also, for this small economy, the GDP will be same. Okay? Let's add the expenditure incurred by all the economic agents in this small economy that we assumed. Okay? So what is the expenditure incurred by the person who consumed this food worth rupees 300? Okay? So the first expenditure is rupees 300, because this is basically consumed by individuals or households. They are incurring expenditure in the form of consumer spending. So 300. Then a restaurant owner has purchased intermediate goods from the baker worth rupees 100. Similarly, baker has purchased wheat from the farmer worth rupees 50, and the farmer has purchased agricultural inputs worth rupees 50. Add all of them, you will get rupees 500. That is the GDP of the economy. So you take whether it is gross value addition method or expenditure method, you will get the same data. That is rupees 500. आपने देखा यहाँ पे कि how we are adding the value addition, and when we are seeing this thing from opposite side through expenditure method also, how much expenditure is being incurred by all the economic agents in this small economy, and add them, you will get the same result. Okay? So no matter which method you take, you will get the same result. The third method is income method. So what we do in income method? Income method we basically calculate the income of households. Okay? Now you can see here, from goods and services market, all the sectors are purchasing, they are spending money, they are incurring expenditure, and that money is going to the firms in the form of GDP. Okay? Final value of all goods and services going to the firms. And what firms are doing? Firms have to pay to the households rent, wage, interest, profit. So whatever is the money is coming to the firms is basically is being paid to the households. So money flowing in the firms must be equal to the rent, wage, interest and profit. Okay? So simply it's very simple. Whatever the firms are getting, it must be equal to, so GDP, as I said you, GDP is equal to consumer spending, government purchase of goods and services, investment spending, and export minus import. And whatever is being spent in the market, the expenditure incurred by all the sectors will eventually flow to the household in the form of rent, wage, interest and profit. Okay? So no matter which method you take, the result will be same. As I explained you that value added method, expenditure method and income method, the result of GDP will be same. Okay? So this is how we derive GDP from a circle flow diagram in the discussion of national accounts. Hope I am able to explain it. All the best.